Crypto's not going away. Bitcoin's not going away. Ethereum's not going away. These projects are here to stay. They're well funded. There's a lot of use cases for them. I use USDC now corporately. We have a Circle account. We've gone through compliance and our auditors setting it up. I'm a shareholder of FTX. I'm a shareholder of Circle. I'm also, I should disclose, a paid spokesperson for FTX. I hold 32 different positions on my FTX account because it's the most compliant one I can find in working with my compliance department and my regulator. I do the same with BitBuy, which is, WonderFi. It's one of our divisions, and I've got a full corporate account there too, because these are compliant platforms. So I can be compliant in Canada on BitBuy, I can be compliant in the US on FTX. So you have to find your geography, figure out your compliant platform, and you have to hire a whole bunch of people to manage this stuff for you. So we're so early in all of this, but again, that's the potential. And I think that's what excites me about it. Maybe 2 years ago, but not anymore. There's just too much capital coming into this market. So you have the Loomis bill, which is a very broad bill. It contemplates all kinds of different crypto. Gilderbrandt's backing her, so you've got both a Republican and a Democrat working together there. There are other initiatives going on. I'm spending a fair amount of my time on the Hill these days meeting. I'm not the only private citizen doing that. We want policy, particularly those of us that work in financial services, because we think it unlocks the power of the institutional investors' interest in crypto. And so we need the policy to get there. I'm going to predict that crypto, and particularly Bitcoin, will be locked between $20,000 and $25,000 until we get policy. It's just not going to go anywhere because there's not enough buyers. You need to untap the trillions of dollars being managed by sovereign wealth, and they're not going to buy Bitcoin until there's regulation. We have this conversation all the time. They're not going to spend an ounce of time worrying about it until they get instruction that they're permitted to index it. And so we're a very long way from that. And so their own clients are calling them saying, look, we'd like to put 3% into Bitcoin, but they have no way of putting that on the balance sheet of the compliant platform for any of these firms. There's no infrastructure to do that. Bitcoin trades 24/7. The majority of their positions finish trading at 4 o'clock. There's a mark to market with the compliance infrastructure to make sure they're not offside on whatever the mandate is. That's been around for decades, but there's no infrastructure for compliant crypto. So we're a long, long way from that happening. And so most of the people that own Bitcoin are high net worth individuals, family offices, hedge funds, and minor institutional clients, very minor. And so that's the opportunity, though. That's the upside. The whole idea is that if you think it's eventually going to get regulated, all of those other players will come in, and then all of a sudden there's going to be 1 to 3% allocation in the typical portfolio, which is no different than a fixed income or bond portfolio or equity portfolio. And that's when this industry will begin to mature. And then also companies will build the financial infrastructure to actually be compliant in crypto with the reporting, whether it be capital gains and losses or some kind of lending program where there's an income to it, or staking. All of that has to get worked out. There's just zero compliance platforms, and so it's really hard to do that right now. And so that's why, for all the enthusiasm about Bitcoin, virtually nobody owns it. I think there'll always be opportunistic token creation and trying to define it, whether you're playing a game or whether you're using it to buy something in the metaverse. There's so many different use cases being tabled, but in the end, when you look at most markets, what you find is it's the adoption of standardization that creates value. So if all of a sudden there's 10 stable coins that come to market for payment systems, my prediction would be that there'll only be 3 survivors 10 years later. And they'll be behemoths, they'll be very large, and they may have slightly different attributes, but there's already 64 billion in Tether and 54 billion in USDC. They're likely to survive, assuming they can survive audit, and then maybe a few others. And always the rumor of the feds themselves creating their own digital dollar. I'm very skeptical of that. The last place you want development work done is with the government. They're the worst at it. So I'd let the private sector figure that out and just the government provide regulation. But, everybody's speculating on this stuff. The one constant that I would remind everybody to think about in why the use case for investing in this sector, and I personally believe over the next decade, crypto will be the 12th sector of the S&P. And the reason I believe that is when I teach graduating cohorts of engineers, I don't care what college you do it at. You can go to MIT, Harvard, you can go to Waterloo in Canada, or Temple, Notre Dame, you name it. A third of the graduating class, the smartest hands above keyboards in the world, because some of these classes are 1/3 international, particularly MIT. They have no interest in, as engineers, to go back to the other 11 sectors of the economy. Zero interest in working there. They all want to work on the blockchain. So my argument is you can't take that much intellectual capital, the best and the brightest, put them onto this sector by the tens of thousands every week and not expect incredible outcomes. So it's just like at the beginning of the internet, and all of a sudden when people thought, oh, the internet's not going to be anything, look at it today, it's the backbone of every economy. The same thing I think will happen in crypto just by the amount of intellectual talent. So it seems pretty stupid to me to invite international students from geographies that are very advanced in crypto and then kick them out of the country after they're educated. It's very stupid, and that policy should be fixed. Even the brightest, look at it, Sam Bankman-Fried. I mean, a 30-year-old, 22 billionaire, he is an American citizen whose parents are compliance lawyers at Stanford, and even he doesn't operate in the United States because he has no policy and regulation and backbone to work with. So all of that money and that intellectual capital that he is gathering from the Caribbean islands should be stateside, but it's not. So we have to get some policy into this sector, or we'll continue to lose the country's brain trust in this nascent sector. First of all, the merge has been forecasted to occur for 4 years in a row now. So for all the excitement, I'll believe it when I see it. There's a lot of people that are dissuaded from doing this in the Ethereum mining business, so they're not that excited about it. So you've got, an inconsistent harmony occurring. Now anything could happen, but really at the end of the day, ETH it's slow and it's expensive, and so if it doesn't fix itself, it's going to have lots and lots of competition, and so everybody has an opinion on this, and I think the market is being the market. I have a pretty big ETH position as well. I'm going to wait and see what happens because it has attracted more applications, more usage than anything else to date. But that doesn't mean it's fixed in stone. Anything could happen, and so I also think that there's other applications from HBAR to Solana, Polygon, all kinds of different ideas in terms of how this should happen and how financial services work, and the cost, the speed, the fees, the transparency, auditability, security, all of these things. And I tell people, look, if you want exposure, have at least 7 or 8 positions on these projects, because you just don't know. You can do it by order of market capitalization. That's easy to find out. But that doesn't mean you're right at doing that either. So diversification on this very nascent system, and whether it's where it all fits, and when people tell you, well, I know with certainty this particular level 2 is going to really work, they have no idea. It's the adoption by users of apps and applications on top of it, and payment systems and transparency and all the rest I mentioned, that will eventually determine whether that platform is profitable or it isn't. At the end of the day, if it never makes any money, it's going to zero like every other business, and many will go to zero, and that too is okay.